Breaking news! The dollar has fallen to its lowest level since 1973. Panic, everybody, panic! So stupid. Jill sent this to me. I was just laughing at this whole article. Wow, it's awful weird too. There's a Dow, S&P 500, all these green, going up because they just passed the Trump tax bill. We'll go into that more now that we have it finalized, reconciliation. Everyone's like, the proposed in the House. I'm like, no, I don't care about proposed in the House. I want to see the final version of the House, the final version of the Senate. They send it back for reconciliation. Once we see that, that's when we know Trump's going to sign it. And that's what I want to see. And so we're going to see it now. We'll look into it. I don't think it's really, I mean, look, it's freaking fantastic. But at the end of the day, I think we'll dive into it. I kind of like looking at my beard, looking like a good old smart guy. Yeah, looking smart. The U.S. dollar has fallen at the fastest clip since 1973. Here's what that means. Trump wants to increase his exports and lower imports. Thanks to a historic decline in the dollar, he may get his wish, but at costs he not anticipated. Oh boy, oh boy. Some global investors no longer expect the U.S. economy to outperform the rest of the world. I'm just curious there, global investors. Has the U.S. economy outperformed the rest of the world lately? I mean, for a long time. We looked at, let's take a look, shall we? Let's just take a look what the U.S. economy has done relative to the rest of the world, shall we? Yes, we shall. There's China as far as I can kick them, but there's China's growth rate averaging over 5% a year for the last 10 years. That's kind of crazy. Let's see what the United States growth rate has done. Again, China is now the second largest economy in the world. So let's take a look. I mean, I'm just throwing it out there. They're saying that the U.S. is not going to be the largest growth rate. Okay, so let's see. Here's the United States. United States annual growth rate is going to max. That's all we can do. Looks right there. All right, so much less than China, about half the growth rate of China for the last 10 years. I don't think we can go back. Yeah, they don't. You have to price it, so not going to do that. That's kind of crazy. It's kind of crazy, is it not? Yeah, I'm not curious. What's India's growth rate done? I don't know. So I could be have a sneaky suspicion it's probably much higher than ours. But let's take a gander, shall we? We're going to go to I right there. India's growth rate. And let's see, GDP annual growth rate right there. And we're going to 10 years. India's growth rate is much higher than ours as well, if you trust their numbers, and I don't. But okay, interesting. I'm just curious. Let's look at Vietnam's. We'll just look at Vietnam's for fun in the sun. Fun time in the sun time. And Vietnam, where are you, baby? Hold on a second, we pause. Vietnam. Okay, it's just so dumb, man. I mean, I just sit there. I'm just curious. What's Turkey? We'll even look at Turkey. Let's look at Turkey. Even Turkey is a little bit above ours over the last 10 years. Okay, then. But these guys, Rob Wiley and Stephen Kopak from NBC News, are going to say global investors no longer expect the U.S. economy to outperform the rest of the world. I just gave you 4 examples: Vietnam, Turkey, India, and China, and they're all smoking us in terms of annual GDP growth when the dollar was stronger than it is now. Over the past 6 months, the dollar has declined more than 10% compared to the basket of currencies for the major U.S. trading partners. Something has not done since 1973. So it declined 10%. Oh my goodness, we're all going to fall apart. It's over, Josh. The simplest explanation is that the global investors now expect the U.S. economy to no longer outperform the rest of the world as a result of Trump's tariffs and worsening fiscal issues. Okay, but even though stocks are returning record highs, the return on other countries' equity has been even stronger. But the return on other countries' equities have been less strong for the last 10 years when the U.S. dollar was higher. So you're going to say, we've outperformed, all right? So think about this. We've outperformed them, even though our GDP growth was significantly lower than them. But now they're going to say, because our GDP growth will be still significantly lower over the last 6 months, the economies have grown their stocks have grown faster. They're going to actually look at a 6-month time frame as based on this, huh? Correlation is not causation. There, Rob Wiley and Stephen Kopak. It's so stupid. Our economies, in terms of growth rate, have been decimated by these other economies for 10 years, even longer, but I can't go back more than 10 years. And our stocks have destroyed these other guys. So you're going to tell me that global investors are worried about our economy underperforming, which it already has done, and that's going to lead them to say we don't like U.S. stocks anymore, or maybe because they're saying we like foreign stocks more, at least for right now, because the U.S. stocks have just so dominated for the last 15 years. It wasn't supposed to be this way. Many members of Trump's own cabinet assumed his tariff strategies would strengthen the value of the dollar relative to other currencies. It's funny because I looked at this. And I said, I'd like to see, because we all know to increase export. Everyone knows if you want to increase exports, you reduce the value of your dollar. Trump was arguing that for many years. Reduce the value of the dollar to increase exports. Trump isn't stupid, man. As much as you hate the guy, he's just not dumb. He knows you want to increase exports, you de-strengthen the dollar. And one of our issues with our trading partners, they do this against global GATT, whatever it is, WTO. You're not supposed to manipulate your currency's value. And China does it all the time because China says we got to increase our exports. We got to basically manipulate our value of our yuan lower relative to the U.S. We know this is what happens. So Trump says, hey, can't do that or else we're going to have to. We want the dollar to be devalued. Trump knows this. He's not dumb. Anyway, so I clicked on this and I said, you think this would be a very quick and easy link. And no, what does it link to? It links to the press, not the press conference. They leave this interview he had Trump, whatever his name is, Scott Bessent, whatever his name is, had with Tucker. It doesn't say anything about specifically improving the value of the dollar. I mean, it might in there, but there's no link to say specifically, hey, that's what it says. It's very, what's the word I'm looking for? Very, I don't know what the word I'm looking for is. Misleading. It's immediate misleading. No one ever thought to increase tariffs, it would help to strengthen the dollar. That has never been thought in the history of economic activity. So it's stupid. It's a straw man argument. I'm going to create an argument you did not use to defeat your argument that you did not use to make you look stupid. It's freaking horrible, man. U.S. growth prospects have weakened. They have? Okay, in part because of Trump's tariffs? What? This has made U.S. debt relatively less attractive for foreign investors. What? Really? Really? I just want to show. Meanwhile, the return on lending to the U.S. is expected to decline as growth here slows. Let's take. Dude. And just in headlines say, non-farm payrolls beat forecasts. The ISM, Institute for Supply Management, returns to growth. That's the services sector. Okay, stupid. But anyway, let's keep looking at this for a second. All right, so right now you could buy I'm not sure if that's a 30-year treasury. I don't know, but 30 or 10-year doesn't matter. They're all the same. For 4.5 in the United States. You could buy the same at 2.15 in Germany, the same 0.5% in Japan. In the whole euro area as a whole, you could buy a 30-year, whatever the hell a euro bond is for 2 point. That's a yield, the interest rate you're getting. Italy could buy 2.15. Now you could go to Russia and Brazil, but you're getting 4.5 in the U.S. of A. China's only 3, and these idiots, Scott, what the hell is this guy's name? Freaking Rob Wiley and Steve Kopak are going to tell us that. The return on lending to the U.S. is expected to decline as growth here slows when you can get double the interest rate, quadruple the interest rate of our major peers, even 33% more than China. In theory, the advantage of a weaker U.S. dollar is that it makes goods produced in the United States more attractive to foreign markets. 100%. That's 100% true. And they're going to say, especially compared to Germany and Japan, are expected to experience higher growth. Really? Really? Germany and Japan are expected to experience highest growth. No one's ever said that ever in the history of mankind. Germany's a basket case. I think Germany's actually in recession right now, a significant recession as well. Let's see. Growth rate 0.4. Japan 0. United States is negative 0.5 because that's the Q1. Q2 we're gonna be freaking burning up like freaking crazy. Japan and Germany, they're not going to have higher growth rates in the United States. That's so freaking dumb, dude. Germany is a basket case. Japan, they'll just puddle along. There's nothing wrong with that. But no one actually thinks these countries are going to have higher growth rates than the U.S. That's, dude. You can't rely. These people are just dumb. There's no other way around it. To say this is silly. Yet it's too soon to say that whether the increasing exports due to lower the dollar is occurring. and anticipate, all right, whatever. Even that the data will likely only show a snapback effect from the first quarter's upswing. And while Trump has announced a flurry of new investment designed to beef up U.S. production capacity, many of those endeavors are months or even years away. Okay, well, we got to start someplace. Now, this right here is a true one. One obvious effect of a weakening U.S. dollar is that it becomes more expensive for Americans to go to popular destinations abroad. All right, that doesn't bother me. But the other problem is a bigger concern is inflation. Lost purchasing power for U.S. consumers and businesses who will remain heavily reliant on imports. Exactly. As a dollar declines, the imports that you've been buying for cheap become more expensive. Thus, it gives incentives for companies to buy at home. No one would ever sit there and say, hey, you're relying on freaking Chinese-made refrigerators, and we're going to reduce the value of the dollar, put imports on there, and we're going to manufacture them at home. No one ever sit there and say they're going to be cheaper at home. No one ever say that, because that'd be silly. It might be, but no one ever say because X then Y. No one ever say that. But we are saying it'd be more competitive, and we can be self-reliant. Sometimes self-reliant costs more money, i.e. inflation. We've been essentially we've been exporting our inflation for decades. That's just a fact. And so finally, and that's why we've lost all our jobs, because we've been exporting our inflation, exporting our manufacturing base, exporting our call centers, all this stuff. At some point, you can't export your economy. You just can't. You got to have a growth internally. And sometimes it might cost a little bit more money for certain products. And that's just a fact, too. So anyway, what was it? NBC News, dumb, just a dumb article. I'm not worried about it in the least. If you want to increase your exports, you're going to have to reduce the value of the dollar. I'm just curious. Let's take a look, though, by the way. Let's look at some other thing here. So that's just a stupid article. But, anti-Trumpers, Trump derangement syndrome is going to get these people for sure. Well, the U.S. dollar is still trading heavily above the Canadian dollar, even though it's lost. It went from $1 about $1.43 in Canada to 1.36. Oh my goodness, we're all gonna die. Let's see. Let's do the euro. The euro went from $1 about 0.93 euro in July of 2003. Now it buys 0.85. So it's dropped. What's that? 8% or so. Oh my goodness, we're all gonna die. Let's do the U.S. dollar versus. Oops, I screwed that up. 1 second. Chinese won. $7.1 by 7.25. 7 of Chinese dollars now by 7.16. Oh my goodness, we're all gonna die. Let's do the Japanese yen right there. $1 bought 161 yen and now buys 145. Yeah, I'm sorry guys, that's not gonna make or break you. That's just a fact. And where is the Pablo, where is the pound? It's always hard to find the pound, the English pound. The pound sterling, 78 cents to $1, and now it's 73 cents. Yeah, about 5 to 8% decline. Oh, well. I know, I'm just curious. What is the price of gold done to dollar? Let's look at gold. GOL. CFP francs, the certified financial planners. We actually have our own currency. It's kind of like the, actually, what the hell is it called? Gold. I don't say gold. I'm not sure. How do you find gold in here? Are you kidding me? Gold is trading at 33 an ounce? Holy crap, dude. I didn't know that. I'll take that. Sweet. I like that. I got some gold. What's Bitcoin doing? Let's just take a look at Bitcoin. I bet Bitcoin's at 120 or something like that. Let's take a gander. Let's gander on over. Let's gander on over to oops, wrong one. Bitcoin, shall we? Bitcoin. Just like good old mama used to make 109. Bitcoin's at 109. All right, so yeah, dude. And Trump just got his bill passed. It's good. It's good to be king. MAGA, baby. All right, God bless.